Many Americans are surprised to learn that some well-known publicly traded U.S. companies are conducting business with nations defined as state sponsors of terrorism. Now, doing business with these nations can provide funding and resources for state-sponsored terrorism. Now, terror-free investing, however, is a concept and a movement that is intended to limit this type of corporate behavior. So by choosing to invest terrorism-free, an investor prohibits their funds from being invested in any company doing business in state sponsors of terror, such as Iran and Syria. My guest has developed a strategy around this concept. His name is Mark Langerman with Empowerment Financial Group here in Scottsdale, Arizona. So Mark, talk about how this strategy came into being.
Scott, first of all, thanks for having me, and I appreciate you taking the time. This is a very important topic for a lot of people. Most people aren't aware that their investments may very well be inadvertently supporting terrorism. It's not dinner table conversation. It's not something you normally talk about with your friends. It's something that really you have to be made aware of. And I've been working with clients helping as a financial advisor since 1985. And it wasn't until 2007 when I found out that many U.S. companies and a lot of foreign companies are still doing business with state sponsors of terrorism. This was at the height of the Iraq War, and it somehow was one of those aha light bulb moments for me where I realized that this is something I believed it was wrong. As soon as I found out, it's like just something doesn't seem right about this, and we need to do something about it. So it was really at that point in 2007 where I kind of nurtured the idea of creating terrorism-free investment portfolios.
So Mark, would it be safe to say that some of these companies we're talking about are very well known and intuitively should not be involved with nations that sponsor terrorism?
Shouldn't have anything to do with it. You would think they don't. And there's a time where we can talk more specifically about some of these companies. But yeah, they're generally large, very large, maybe even mega cap companies, again, US and foreign. Some almost 10-ish% of the S&P 500 right now are still doing business with state sponsors of terrorism despite sanctions, despite tariffs, despite any political pressure and so on. And it really goes to the core of terrorism, because without money, without technology, without being able to conduct banking, move cash around, there's a number of factors that if these countries, it was more difficult to get either their hands on these goods or services or be able to utilize them, they wouldn't be able to conduct their terror operations and pursue weapons of mass destruction.
So Mark, this idea has been compared to the Anti-Apartheid Movement. Can you explain?
Well, it's actually modeled after the Anti-Apartheid Movement in South Africa in the mid-'80s. Many people attribute the U.S. investor, people like you and I, pulling out of selling stocks of companies that did business with that government as being the straw that broke the camel's back that actually brought down the apartheid government. So it's very similar to what I just said. If there's enough pressure put on these companies, if they're held accountable by their shareholders, there's a good likelihood at some point that they're going to stop their business practices with these companies, with these countries, these state sponsors of terrorism. If it's just the government and it's just a penalty or a fine or something like that, it's business as usual. They need shareholders to really stand up and take a stand.
Finally, Mark, as far as I know, this is the only strategy around the concept of terrorism-free investment. Is that correct?
Yes, for the general public. Institutions can do it. So the option was modeled after these state divestment programs. It's a mutual fund, large cap, a U.S. mutual fund, U.S. companies, and it's a nations-only mandated terrorism-free mutual fund. And the nice thing about it is that it's not just allowing people to invest with their values and their conscience, and many would say do the right thing. It's been out long enough that their performance is proven. It's a very good, solid performing fund. And many would argue you don't have to give up performance to invest with your conscience. But in addition to that, it does something else. It mitigates what's called global security risk. And really, it's one of the, I believe it's the only fund, but it may be one of the only funds that focuses on mitigating global security risk in an investor's portfolio. Most people are not aware of that term. There's other types of risks. There's geopolitical risk, there's economic risk, there's earnings risk, there's moat depth to a company's business. But geopolitical risk was actually coined and created as a true risk category in the early 2000s by the Securities and Exchange Commission. And the reason they did it is they understood that could be a significant risk to shareholders. If a company is doing business with a state sponsor of terrorism and for some reason economic sanctions are imposed or war breaks out or civil war breaks out, that's always going to impact a company's operations. And the SEC felt so strongly about it, they created this risk category and laws so that U.S. companies have to disclose these business dealings with their shareholders.
All right, Mark, thanks again for your time.
Thank you, Scott. Appreciate it.
That's Mark Langerman with Empowerment Financial Group in Scottsdale, Arizona, and you're watching Retirement News Online.